Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 8th, 2019. In this video, I want to cover a sector and some trade ideas within that sector that stand out. It's actually a subsector of the technology sector. It's the Internet Content and Information sector. That symbol on TC2000, the charting program I'm using here, is IX2440, and I imagine on freestockcharts.com as well. That's the sister program, charting program from the same company. So what I'm looking at, it's just a nice. I came across it's actually a couple names I came across, and I did flag those on as components within this sector. I'll go over that. But as far as the sector goes, you can see it's taking the shape of a nice bullish falling wedge. Like so many things recently, we had nice strong bullish divergence on the daily time frame at the lows on December 24th. So same story across the board. And again, despite the any near-term pullbacks, we're getting a little stretched right now in the market. I'm expecting a pullback, but again, you have to define your trading style. If you're a very active trader, you can try to game those. But as I said, I still think there's more upside to come. How much more? It's really hard to say at this point. If I'm going off the premise, which I am now, that this is a bear market rally, then what I need to do is discount just how far these bullish falling wedge patterns can go. In other words, if 3, 4, even 2 years ago, I had a bullish falling wedge pattern on the daily time frame with bullish divergence, that is a screaming buy signal in a bull market. So here's the last time this sector had bullish divergence, right? Actually, nope, I missed that. We didn't have divergence there. We did on the RSI. There was a little bit of divergence, but we haven't seen clean bullish divergence on the PPO here, multi-month divergence that is, and the RSI like this in a long time. And when you get that in a bull market, it's time to load the boat on the ride to new highs. However, if it comes in a bear market, and which by some accounts this has been, the Nasdaq 100 hit a bear market, designation of a drop over 20%. The S&P 500 missed it by mere basis points. The Dow missed it, but that's all semantics. It's stocks. The longer term outlook is still bearish. A lot of key trend indicators have rolled over. The trend indicators that tell me that we're most likely in a bear market. So as of now, I'm treating this as such, and therefore, one way to look at it, you can take a bullish falling wedge pattern. It's a simple but very effective measurement. There are all kinds of measurements. You can go online and for any technical pattern get different measurements. Some are so fancy they make your head spin. You have to pull out a calculator to do it. I find that the most simple measurement is usually the most effective, and that is to take the widest part of the wedge, which I've done here, and add that to where the wedge breaks out. So this would tell us if this breakout today sticks. Now, again, I'm a little concerned right now. We're getting a little stretched in the market, but remember, we were very overstretched to the downside. So I've already shared my convictions that they're not super strong on a 2-3% pullback that I've been talking about coming up here in the broad markets. We were extremely oversold on the December 24th lows. Like I said, I think it got ahead of it. The market got ahead of itself both fundamentally and even technically. And the more the rubber band gets stretched, the harder it snaps, and that's how stocks work. So therefore, we could continue to rally. Either way, this is a measured target. If I add it here to where we've broken out today, there is resistance overhead. It comes in right about my uppermost target there, and that would be, to try to measure it out for you, a gain of about 11.8, we'll call it 12%. And again, that would be my max target. That would be if this pattern played out to its projected measurement. However, in a bear market, usually bullish patterns either fail to play out at all, or if they do break out, just as they start to get going and look like they're getting some teeth, that's when the sellers step in and reject it. So we have to be careful here. But again, the easy money is not made. There's no easy money to be made right now. These are big gains to be made in a bear market rally, and they're not easy. Nobody wants to buy, just like nobody wants to short, at the top of a bear market, but that's when the big money's made. Again, it's not easy money, but that's where the big gains are made. You can make, just in the last couple weeks here, 12% return. Most people would be besides themselves to get a 12% return for the entire year on their portfolio. Where here, a lot of stocks and sectors in the broad market itself, you've gotten that in just a few weeks. So again, big gains, but it's not easy. So with that being said, there's the chart pattern, there's the divergence, everything I like to see. These are resistance levels, so the sector is at resistance now, and that's why I'm not at this point in time. I'm watching this sector, considering some of these as trade ideas. I don't believe there's an ETF. I'll have to check on that actually, that tracks this sector alone, but I'm going to show you right now my top picks in the sector. And before I leave this chart, let me just show you. If we do get that pullback in the market that I think is coming here soon, then this breakout will probably prove to be a false breakout. One thing I don't do is if I'm looking to play a breakout, let's say, for example, on this downtrend line or bullish falling wedge pattern, and I see a pretty significant horizontal resistance level just overhead, which I do here, I don't take the breakout above the downtrend line. I wait till the latter of the two are taken out. Intraday, we popped over that resistance line, but so far we've fallen back below it. So I think there's a good chance that we may get another pullback within this wedge, and then we can either look to recycle in here on the pullback in anticipation of a breakout, and/or maybe take a partial position. That's what I mean by and then wait for the breakout, and then add to those positions there. And right now, I think let's just focus on this level here, and that would be about that 74,808 level, about a 7.5% or so gain in the sector. And again, we'll have to see how the charts look if and when we get there. All right, so let's roll through these individual components. We'll go through them pretty quick. And again, no particular order, just components of that sector. CCIH, let me turn the symbols up in case I don't read them out for you. Chart properties, where is that symbol? Nope. Price style, color grid, there we go. Symbol watermark right there. Now you can see a little better. Okay. CCIH, it's basically a play at support. There's couple basic and simple rules in technical analysis. You buy pullbacks to support. This is a very well-defined support level, or you buy breakouts of resistance, or you short a run up to resistance. So this is a simple, very clean price channel. You would have done well in the last year or so buying this stock every time it came down to the this $1 price level. $1 is also a pretty significant level because most companies will step in to defend that level. If a stock drops below and trades below $1 for too long, they face being delisted. And so therefore the owners, the major shareholders in the company, executives, all come in and buy the stock and do what they can to keep it falling from under. And so far, watch, rinse, repeat. So it's an objective long if you can buy it around close to $1 with a stop not too far below. And you might want to swing trade it to the top of the channel. That's simple math here. I don't have to pull out the measuring tool. You go from $1 to $1.66. It's a 66% return. Yes, this is a penny stock. Yes, that is above average risk. So how do you trade that? If you decide it's right for you, you do not put a full position. If you would normally put 10 or 50,000, whatever your number is, 2,000, doesn't matter, into Apple, or QQQ or SPY, you take a small fraction of that and put it into this one. Is it worth your while if you take a 1/4 or position size? Absolutely, if you're targeting a 66% return, because if you cut that in half, you're still talking about a 30, 15, plus almost 20% return. So well worth it again if you reduce your position size, but that also helps you on the loss size. Because or the downside, because if it drops below $1 in your stop, you're going to give it a little room, set a stop around 94, 95, 96 cents. Again, that could be a pretty big percentage loss, but it will be much more manageable in dollar terms if you keep that position size low. That's what I refer to beta adjusted position sizing. So in this one, let's just say no more than 0.25% beta adjustment on the position size if you decide that's right for you. MOXC, I haven't even marked up all of these charts yet. I was just going through these yesterday, but I'll do that for you now. You can see similar on this one, similar to the sector. You have nice bullish divergence down here. I don't know about this one. I flagged it just going through this list quickly, but I'm not a big fan of sub $1 stocks. The gain potential is explosive. I'm going to point it out for you guys, but I will say, and I cannot repeat this enough, very high risk. A lot of times when a stock comes down and trades this far below $1 for a period of time, other than being delisted, they're probably facing a bankruptcy file. The company, there's something fundamentally broken with this company. They're probably not profitable, almost certainly with this kind of share price. And one day you wake up and you see they filed for Chapter 11 bankruptcy protection. So even if you adjust your position size down, the way I say it, when you trade a penny stock like this, on anything under $1, do not put in any more than you are willing to lose, and I mean that wholeheartedly. So there's your Vegas money, your play money if you want to put it in. There's a downtrend line to watch. There's a divergent low. We'll move on from there. FENG, I guess the way this list must have got sorted, these are low price. So we'll get to some of the ones, there's some bigger companies in here as well. Same story on this one as with the sector. You have a divergent low. There it is, bullish divergence on both the RSI and the PPO down here. And we could probably add a downtrend line, not a very well-defined one, but there's a downtrend line to work with. As far as targets go, let me move this line up here for you. And I would say that is certainly a level. I see a lot of nice reactions going back in time. So I think this would be a magnet. If this stock starts to get some traction, there's all the reactions along that level right there, 382. As always, if I am trading a long position and I'm targeting a resistance level of 382, I will set my stop below that because a lot of eyes will be looking at that level and sometimes the sellers step in early. In fact, I would probably come in just shy, a little below that reaction high right there. Whatever that number is, you can just replicate that chart yourself. So you could go long here soon. It's at there's some support around that level. See these reaction highs here. It dipped below there briefly and it's back above it. Or you can wait for a breakout of the wedge, or you can do both. Take a starter position and then add on a breakout. And yeah, I would be out of it if it got anywhere close to that 382. I wouldn't hold out for any more. Not that it couldn't do that. When this stock wants to run, as you can see, it runs. It's a low price stock. There's a 238% return in just 4.5 months there. Am I expecting that again? No. Is it possible? Yes, but again, I think there's a good chance that we're in the early stages of a bear market, so I'm just looking to play these, counter trend rally. SOGO, S-O-G-O, SOGO Inc. There it is. There's your divergence right there. I don't want to force a trend line on this one. Let me see. That's probably why I didn't already have one drawn out. But there's a couple reactions there, so that might be your pattern. Wait for break of that. Targets, I should add another line for you because I do see resistance right around here, about 648 or so. That would be my initial target, with a final target up here around 8. That $8 level is pretty significant support. When I look to the left, I see reactions from above and a lot of reactions from below. That's I know that's a big move, but these are stocks that have these big price swings. Otherwise, I wouldn't be looking at such high targets. A lot of people ask, where do my targets? How do I come up with them? It is a lot of experience and instinct, gut feel, but it's also looking at the chart. And I know these are stocks that swing up and down, double and even triple digits in their trends. So therefore, an 80% gain to that $8 target is not out of the realm of possibilities here in the next few months. All right, next up, Snap. Snap, I like this one. I've actually got to position this one on an IRA account. It has a nice downtrend line here. It just took out and it's running up, and now it's at resistance. That resistance is right around 650. Right around 650 or so. I should have that line a bit higher there. Either way, we'll call it 650-ish. It's not super well defined. Next target 746. So you want to see it take out 650. And again, if the sector comes back in, which it may or may not, these are explosive patterns. These are strong divergent lows. These stocks had the snot beat out of them. and they could certainly continue on up for a while. So the next target being, it's at 637 now. If I can grab that level without moving the line, 746 next target, that's about a 17% gain. And then this downtrend line, I think will also, that would be at least, it is my initial, my target where I plan to take profits if we get up there to that trend line, because I think you'll have a substantial pullback if and when that's hit. So maybe something along these lines, boom, breakout, come hit that level, maybe come back test, work our way up there, and then pull back. Could ultimately go on to break above that trend line, but that's all I'm looking for right now. S-Fun, Fang Holdings Limited. There's your downtrend line right there. We had divergence forming that never played out. There's an example there. The chart, some charts, especially in a strong downtrend, divergences can be burned through. So we don't have bullish divergence right now, but we have what looks like a selling climax on that one. You see that big red candle right there? That was actually on the 21st before the market bottom, followed by a pretty big green candle, and the stock has been moving up since. Although, you know what, I don't really see the volume surge I'd like to see. This looked like well, that wasn't a selling climax because that was on an up day. So let's stay away from this one. Plus, it's too close to that $1 level, and it looks to be flagging. Went through these. I flagged a lot of these stocks, but yeah, this one I'm going to uncheck right now, the flag list. All right, next up, MOXC, Moxion. Let's see, we have a downtrend line there. We have like a lot of these stocks, bullish divergence here with the PPO just now poised to cross up. Again, I don't know if I hit on this one before. Maybe I did. I just deleted one off the watch list. I might have jumped back down here. Low price stock. Be careful with that one. YY. Here we go. This $65 stock. And nice looking chart. There's your bullish falling wedge pattern. Fell down to support. We had a couple reactions right here around that 56.50 level. There's reaction 1, reaction 2. We had reactions back here to validate that. So here's a stock that was oversold down to support with bullish divergence on both the RSI and the PPO down here. In fact, the divergence comes all the way back from this point there, like that. And like the sector itself, it tried to pop today, but there's a problem. That's why this breakout didn't fail. Look like the real deal. If you zoom in there, let's see. You can see this stock was up at one point from above where it is now about another 4.5% or so, but it ran right into resistance. So that's the story on this one. You have a downtrend line that was taken out, but it ran into horizontal resistance, and that's why I always watch and look for any nearby resistance levels on a breakout. And if so, you want to be safe, wait for the latter of the two to break. So what this one may do now, it broke out. We'll see, it may not even close the day. It may fall back below, and that's just a failed breakout. But if it holds that breakout, maybe it comes back in, back test. It might build up some potential energy here, but then you want to see it break above the top of that trading range, about 70.50. If so, this one could run. This is a potential long-term target here around $88. There might be I'm sure there'd be some resistance here around these reaction highs, and there's a big gap there, but quite a lot of potential. And remember, this could, this doesn't have to be a bear market rally. We could be looking at a, multi-month, 6-month plus rally, maybe takes the market to new highs. I don't think that's the case now, but you have to be open to those possibilities. So one thing you can do with these trades, and this is investing 101 or trading 101, is let your winners run. Let's say you take this one and it starts to work out, it starts to pan out, move up. At that point, instead of booking full profits there, although I do expect a reaction, but you can just trail your stops up and let it ride. And who knows where this or any of these stocks can go. So that's one way to at least assure a profit. Once you get in, raise your stops to break even, and then either manually ratchet your stop up as it goes or set a trailing stop. Now, if you trade a stock like this, these suckers move probably 3, 4, 5+% a day some days. So if you run a very tight trailing stop, 1, 2%, you're almost certainly going to get taken out on any given day just from the daily back and forth on these things. So you're going to have to use a wider stop, 5, 8%, whatever your comfort level is on those, to successfully stay in a longer trend trade, that is. All right, IZEA, let's see. It looked interesting to me. It's a low, looks like a thinly traded. You can see these funky looking candles. That just mean the volume. Thinly traded, low volume, low price, penny stock. Well, it's been flirting with that. There's a $1 level. So twice it dropped below $1. And like they often do, they came in, they stepped in and bid it back up to get it back above $1. So this 80-cent level is a key level. That's where it fell to both times. And both times it popped back up from 80 cents to the $1.66 level. And that was support back there. It's chopped through it quite a bit, but that seems like a key technical level. So bigger picture is this stock is basing here. Again, low price stocks. I don't want to spend a lot of time on it. Very high risk. Do your own due diligence. Keep your position size small or pass if it's not your cup of tea. But if it can pop 166 with conviction, really doesn't have a lot of resistance up here at about $3 and then possibly 382. But again, if you want to play it safe, stick with the higher price names like WUBA, WUBA58.com. And there's your falling wedge. Again, like everything else in this sector, most of them today popped above a downtrend line. Let me clean that trend line up. There it is. Captures those reactions a little better. So a failed breakout, intraday pop, didn't have volume. You can see the volume is lackluster. That is a sign of non-confirmation. I like to see on long side breakouts volume of 1.5 times or better the average volume. When you get the above average volume like that, it tends to give you a much lower failure rate for the breakout. So this one pretty much just needs to take out today's high. If you want to keep it simple, today's high was 59.57 because that would take us once again above the trend line, and I had a little horizontal price resistance level there. Target 62.20. Let me turn that up for you a little bit so you can see it a little more clearly. 62.20. It's not very well defined. Maybe all the way up, let's call it a target zone, all the way up to about 63.74 and possibly up here at about the 70.50 level. I mean, if things got really good for this stock, if we really get a rally with some legs here, possibly all the way back up here to the $77 level, and certainly in the realm of possibilities. And that'd be a nice gain from a $57 stock. Bullish divergence, by the way, under confirming the wedge. WB, Weibo Corp. Nice, pretty well-defined downtrend line, simple breakout and back test, and support. So I do like, this is what I see on this chart. We have support right here. I'll turn that price level on in a second, tell you what it is. So we had a downtrend line right there, breakout, back test, which also came down to this support level. So if with this stock, there's a couple ways to go. You can do TA 101, buy pullbacks to support. It's a well-defined support level with a stop not too far below. That support's around, we'll call it $54. The closer you can buy it to 54, the more objective. We've already back tested once, so this thing may want to go, especially if the market goes. This is not a very well-defined level. I had two levels there. Let me move that line up out of the way. Let's move that down. I'm looking at these reactions here in that gap right there. So that's the number 63. We'll call it rounded up. Nice round number. 63.50. If it can pop 63.50, especially impulsively, I think it comes up here to 70.50. That's a pretty nice trade if it gets there. And then quite likely all the way up here to, let me turn this level on here, about 80.75. That would be my max target at this point in time. All right, next up, Grubhub. Nice, clean, bullish falling wedge. Very beautiful little pattern. Confirmed with bullish divergence, everything I like to see. Breakout, back test. This is just a beautiful example of technical analysis. There's your breakout and it hit resistance. So this one's kind of ahead of the pack. Had $77 resistance. If I can draw a horizontal line there, you can see it there. $77 resistance. It popped on a low volume breakout. The breakout failed, but it came in and back tested the wedge, and that's normal. Usually you either break out and run or you come in and back test. And so far we moved up. We took out the previous reaction high, and right now we're at resistance around 82.30. So that's the next level. The next buy point will be an impulsive break over there. It takes us up to 95. And that would be, looking at this chart, I think I'd take the money and run if and when it gets to 95. Shutterstock, I actually use this one. Some of the images on the site you see I purchased through Shutterstock. I don't know what else they do. It's under this internet content and information, but most of what they have are images that You buy for graphic design, websites, whatever you want. Nice divergent low here, like everything else. Strong divergence. Stock got the snot knocked out of it in just let's see how long. Try to tell you just to get a feel for how much some of these companies have fallen. This stock plunged 43% in just 2.8 months. So you have to ask yourself, has the fundamental landscape, and this was my reasoning before expecting this rally in the markets, has the fundamental landscape changed that drastically that this company is now selling for almost half of what it was just a few months ago, especially based on what I just told you what their business model is? I don't think so. So that's a case of a little too much. Like it always is the case. The pendulum swings too far usually, especially during panic type waterfall sell-offs. This sell-off that we just went through was a lot of forced liquidation. So I think a case could be made fundamentally. I'd have to dig into the fundamentals to tell you that for sure, and that takes a long time. That's why I love technical analysis. I can look at a chart, spend a couple minutes on a chart, and I believe I can beat the analyst 99 times out of 100 by looking at a chart to determine where a stock is going to go versus them trying to crunch numbers, which are half the time cooking the books and a lot of hindsight stuff. And fundamental analysis, this was akin to driving in the rearview mirror. You're looking at numbers from a last quarter, which was a month old by the time they even report the quarter. And the landscape can change so much faster, and there's so much more to it. So the best trades are when you can marry fundamental and technical analysis, and I'm talking long-term trades. But when you're actively trading, fundamentals mean squat. Let me say that now. If you're looking in your time frame as you're swing trading a few weeks, I don't think there's a swing trade in the world that uses fundamental analysis. Technical analysis is all that matters. Now, I do long-term trades on the site, and I also do a macro view, and I look at the markets longer term. Then I factor in fundamental analysis along with the technicals. But so there it is. This one, let me give you that line. I went off on a little ramble there, but there it is, right at resistance 3650. That's the top of that, the bottom of that gap right there, at least that reaction there. So here's one, and you can see a lot of reactions there. So this one needs to pop 3650. If it does, I believe this one goes up here to about, I'll be conservative, put it down a little below there, 3925 to maybe a little bit above that. And ultimately, then you want to target. This is where I'd be out of this one if I decide to take it. 4173. That's the bottom of this big gap right here, and a lot of reactions. So I get a lot of questions. How do I draw my trend lines and annotate charts, figure out targets? That's one reason I didn't have all these charts fully marked up. I wanted to go ahead and add those lines as I did the video. So there's a big gap, a lot of reactions, and just based on the scope of this pattern, the divergence, everything else, that's where I think this stock will go before all said and done, unless the market just takes another dive down. But as of now, let's say that's my preferred swing target, and that's about 14% or so from where we're at, and that's Shutterstock SSTK. A couple more. IQ, not my favorite, but there's a downtrend line to watch. We're a little ways above the downtrend line, so I'll move on. I just want to point that out. You can replicate these lines on your chart. This one's come down quite a bit. It doesn't look like it has a lot of trading history. It must have been a new IPO back here earlier in 2018. Let me move on. TZOO, TZOO, Travel Zoo. It looks breakout today. I had a line right here, and that line was resistance. This one has been forming a nice basing pattern right here in this trading range. You can see we had a reaction low there, reaction lows, and a gap down below that support. This was support. We had a gap down. It came back up and tested the top of that support, and it finally broke out today. But again, the sector in the market might be a little stretched here, and I showed you the sector running into resistance today. That may hold this one back, but not always. Some of these companies, there's not a lot of some sectors have a lot of diversity within it, like this sector. I just showed you a minute ago Shutterstock, which probably has nothing in common with Travelzoo. I don't know what Travelzoo does, but I doubt as the name implies, probably something to do with travel. Whereas when you trade GDX, all the gold miners are going to move together very tightly. Why? Because their bottom line is affected by much more so than anything else, the price of gold. So when gold goes up, the value of the miners go up, and they trade in concert very much together. Birds of a feather flock together. In this sector, not so much. So the point I'm trying to make is this sector doesn't have to break out for a company like this to go. And if it does move up, let me use these line tools. Let me give you that line right there. That's my target right here, about 12.23, maybe down to 12 if you want to be safe. It's at 11.62 now. All right, OPRA. This one, again, looks like a newer company because I don't see any trading history back beyond 2018. So it looks like must have IPO'd earlier in the year in 2018. I'm a little leery on charts that I don't have multi-year trading history. So we have divergence here, but again, I can't go back very far. But what I can tell you is the stock has pretty decent, it had resistance there or support around 650, broke that support, fell down, nice rounding bottom here, and now it's testing that. So today it had it popped above there, but it failed. So I think pretty much a pop above 650, especially an impulsive break or even maybe above today's highs. Better if you can confirm the sector breaking out. This one comes up at minimum here, I think, to about 708, and quite likely to the back here at about 746, and that would be a pretty good size move on that stock. SINA, Sina Corp, nice downtrend line falling wedge. We had one little false breakout, and that's fine. Sometimes that happens, but the downtrend line is still being respected. It was respected yesterday. Prices stopped there, and again today. So you need to see a solid impulsive break of this trend line. And then where do we go from there? Well, I should turn these levels on for you, about 65, all the way up to probably right about here. I can even move that one up a little bit more, 72.53. And possibly as high as 78 or so, roughly. Forget about this. I don't think we're going to get back up there on this one. MARK, Remark Media, divergent low. Don't have a real clean downtrend line or anything to watch. Let me move this line up here. Yeah, that's the next resistance level. So we put in a divergent low, and it's been moving higher since. I don't see any decent resistance up until about 204. It's a low price stock, $1.53. Keep that in mind if you decide to take it. But that'd be about a 34% gain if it got to that level. So maybe get out of that one if that's your cup of tea, those low price stocks. And finally, EverQuote, another one that looks like a lot of these companies just started trading in 2018. As we know, bull market, everyone starts coming to, IPOs start flooding to the market shortly before it tops. But there it is, bullish divergence. Not my favorite, again, because there's not a lot of trading history, but I don't see a whole lot of resistance up here at about 650. So we'll wrap it up there. Long video, but a lot of names to trade. And again, keep in mind, when I come across a sector, whether there is an ETF or not, if I like the sector, I'll go through and give you the individual trade ideas. There are just too many for me to make those as official trade ideas. As I, did the video, I try to tell you the ones I like better than others, the ones that you may want to be careful if they're low price, higher risk. But again, by all means, take those trade ideas. If I didn't like them, I wouldn't take the time sharing them. So some of these may or may not make it on as official trade ideas, but at least I'm trying to point out the sectors that I think will outperform the broad market here, and that's the videos that I usually put up. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.